We have a great mortgage question. It comes from Michael Carter of Chilliwack. Michael says, Bill, can you please tell me how do the lending institutions come up with their mortgage rate?
There are actually two types of mortgage rates, and how they are determined are in two different ways because they have different relationships. So you have your more aggressive variable rate mortgage, which is tied to the prime rate in Canada. So the prime rate right now is at 3%. You can get a variable rate as low as 2.6, which is 0.4 off the prime. So how do they do that rate? Well, that rate is actually tied to the Bank of Canada rate, which is at 1%, and then the banks add their 2% profit to that. That's how they do that discounting, so they can go back and forth. The prime rate is determined by the Bank of Canada because it actually has an impact on what happens with inflation. So if they determine that inflation is starting to creep up, they'll increase that prime. If they think the inflation rate is starting to get stale or not going anywhere, they'll start dropping it to encourage people to shop around and get better rates. So that's the one side. That's how the banks get the variable rate mortgages. On the fixed rates, we've gone from the gold standard about 1994, and now the banks actually go and borrow their money from the bond rate. So they go on the bond market and they borrow the money from the bond market. So the bond market will dictate for the bank how long they can have that money and what rate they can get it. So if the stock market starts really getting competitive and it starts really heating up and people see that there's a better opportunity to get a return as an investor on the stock market, they'll take the money out of the bonds they've got and put it in the stock market. So what happens then is that the bond market then has to increase their rates to compete with the stock market, which then forces the fixed rates for the encourage people to bank at the variable rate mortgages. On the fixed rates, we have market rate, which allows the banks, and when they buy their money, they have to determine what's going on with the bond market at that time because they have to buy it for 5 years.
You can always get expert mortgage information online by visiting BillyMac.com. That's Billy with an I, not a Y, MAC.com. Or call Bill at 604-684-4663. That's 604-684-HOME.